Alphabet, FedEx, the Fed, and Disney-Fox are what TheStreet's columnists and editors are watching. I'm Catherine Ross, live at the NYSE with JIm Cramer. Jim, investors have a lot to think about. Let's start with Alphabet.
Yeah, okay, so there's two stories to Alphabet. One is the $1.7 billion fine. And when you see the kind of thing that they did, this third fine in antitrust, I mean, this is all the kind of ingenuity. I mean, you just kind of take control of the situation and then suddenly you find out that you're so big that people don't like it. This was not predatory behavior from what I can tell. I think it was just what happens in Europe when someone's really powerful, and I think it's one of the reasons why we like America. But America, also, they've had tussles. Amazon, Alphabet, Facebook, these are very big companies, and the Europeans don't like them. Okay, so they periodically collect money from them for things that obviously you could argue they've done. So I think that's the negative. They have a lot of cash, not worried. The positive is, the more I dig on the gaming story, the more I recognize that if they get the gaming, if they get the herky-jerky out of it, it's going to be great for them, a subscription revenue stream. They, unfortunately, I think, were not prepared for the market's reaction. They're not ready to talk about price. They're not ready to describe exactly what you'll get. It was more of a tease. That's why I think people gravitated toward buying AMD. They think Alphabet's such a big company, it can't move the needle. I am a huge believer in revenue streams that are repeat, subscription. This is a very big breakout for Alphabet. It's very powerful.
But do you think that they should have waited until they had the...
I thought about that, but it was driven by the gaming conference. But
then they have E3 too, which is in June.
I have gone back and forth with them on that, and they are swamped, is the way I would look at it. They don't even have time to tell their story. So I'll tell their story. I think this is the cheapest. It's not the cheapest FANG stock. It's Apple, then Facebook, and then Alphabet, okay? But Alphabet is got a lot of cash. They've under-monetized a lot of things, and Facebook over-monetized a lot of things. Well, they still have more stuff to monetize. But these are all companies that have more revenue streams than you realize. You know what? Between that gaming and the new AirPods for Apple, I think very important. I think that AirPods are wearables are a category that it also leads to revenue streams that are repeatable. Of course, the watch, maybe with healthcare.
Do you have AirPods?
I love them.
Yeah.
I love my AirPods. And the new AirPods look very, very powerful. Look, I don't leave home without my Apple stuff. I mean, I was down in Mexico. I actually have, I make it, my wife got me this. This is what I have. I think that you absolutely have to have something like this if you're going to be in the game. There we are. Who does not have that? Thank you, Lisa, for getting me that. I had to put it on the outside because I don't want to have to fumble and try to find it. And I don't think I'm alone. I think Apple misjudged demand for the first round terribly. They don't really want to talk about that much, so I'll talk about it. I think that the problem is they could have had a better quarter had they sold more. I know people think wearables didn't move the needle, are not moving the needle, but I caution people, wearables are bigger than the iPod. The iPod is what got the Apple move started to begin with. So people just continue to underestimate what Apple's doing away from the phone, and it's going to be at their peril. I think that now obviously we've got a big build-up for next week. Will they deliver something? If the stock hadn't moved, I would feel more comfortable. But I like Apple. I'm not pounding the table for action alerts, but I like Apple.
What about FedEx?
FedEx is. There was a moment on the conference call where I know that Fred Smith, who's a great businessman, just said Wall Street wants you to give the money to them right now. I don't think people understand what FedEx is doing. FedEx is trying to block out everybody else so that they are the worldwide freight company. It is very hard to do that and please Wall Street during a period where Europe is horrible, Brexit is coming up, and we have a trade war with China. But Fred Smith is not going to say, you know what, we're not going to invest. He's investing. The only thing that was really dispiriting is that they have jets that are 40 years old, the MD-10. Did they underinvest? And that's why you've got this negative free cash flow. The long knives are out. I would have thought there was more downgrades. We only got one downgrade. But I do feel that FedEx is very tough to own right now. Very tough.
Do you think that it's a bellwether for the economy?
No. I think that domestic was very strong. I really like domestic. I know that, again, there are issues. People that need to read through it and realize they had to invest even to meet demand domestic. But international is very bad. And that is kind of what Jay Powell said. Now, Jay Powell, we have a meeting, we have the Fed notes come out. Look, I am adamant that this was the quarter where the weakness in overseas hit us. And it really hit these guys. It really hit FedEx.
When Jay Powell speaks, as you just referenced, what should investors be watching?
How patient is it? I mean, there are many people who believe that the economy is rebounding. I think that the economy can rebound, so I'm in a different camp. Remember, I am concerned about trade. I have a piece. These people are very noisy. I did a piece this morning in Real Money about my problems with potential trade deal, and that's going to, I think, put a lid on things. But there are individual stocks that are doing well. That was my theme last night in Mad Money, and in many of my writing in Real Money, which is that there are individual stocks that are standouts, and they're big enough to be able to make it so they have impact. But we were talking about home builders. They haven't moved yet, but Ivy Zellman says they're going to move. She's the best, so maybe we get a move in the home builders. Watch Home Depot, Action Alert name. I think it's going to be good.
Okay, and then I've got an investment education question for you. Now, as you know, we have a retirement event coming up.
Yeah, that's coming up, and it's got the best people. And I don't want to retire, but if I did, I'd probably go.
Okay, so my investment education question does have to do with retirement, and that is, if an investor is preparing for retirement, what is the first step they should take with their portfolio?
Well, first of all, we're all brainwashed by index funds, right? Because we're not even allowed to talk about. I can talk about whatever I want. Go tell my ma. But I think that it's okay to cut back. The CD rates are pretty good. So you invest for retirement, obviously you're going to need the money. And if you need the money, you need to cut back. I like 50% CD if I were to retire. Now, my late father never retired. He was walking around with a gigantic mutual fund portfolio. But I do think that if you, CDs are pretty good right now. Not bad. And so you have to take some off. I think 50 for retirement. 50 still has to be in because people live longer. But I wait to hear what the retirement look. We got real pros. I have for the longest time have said longevity plays a bigger role than people realize in your allocation. But let's see what the pros say. And that's coming up, right? People should go.
So I want to ask you, the Disney-Fox deal is now closed.
Yeah.
What do you think this means for Disney-Fox going forward?
Well, I mean, Disney went down dramatically on this. We sold some Disney at higher. I think that Disney is all about a possible guide down because of the investment. Remember, I think the overwhelming issue is if you have to invest. Like last night I had Nutanix on. They had to invest, so therefore their stock got crushed. If you have to invest, then you're hated. Is that right? That's where Fred Smith does make a good point, which is that, hey, listen, we're investing, and you don't have to like us. I think the problem with that is that you're supposed to like a stock if you own it. I mean, I know at one point he said, well, listen, we're not pleasing Wall Street. Well, I mean, you want a stock to go higher, but he wants to build the future. And if you want to build the future, you have to do what Disney's doing, which is build out Disney Plus. You have to build out ESPN Plus. You have to take advantage of all this new content, and you have to monetize very quickly. And that's very difficult act to juggle. I think the monetization is going to be the next year, and therefore I think people are going to be struggling to find a reason to own the stock right now.
All right, that does it for the show today.
I like it a lot. Let me just explain why I like it. Because we are not intimidated by investment years. We know that investment years end. Look at Comcast. Look at what we did with Comcast. We bought a ton of Comcast because it was an investment year, and then the investment's done, and look, and now you're in cash flow mode. Look what happens. I know the market's tough today because the Fed, and market's tough today because FedEx. Market's tough today because we don't know what Micron's going to say. Market's tough today because the banks had such a reversal because we didn't get we didn't get Commerce Bank to buy Deutsche Bank, and oil has to keep going higher for the market. So I mean, but I'm focused on investment year. Investment year.
All right, that does it for the show today. Jim, thank you for joining us.
Thank you.
And for all of you on Facebook right now, if you want to hear more from Jim on some other big headlines that we're eyeing, make sure to sign up for our premium subscription, Action Alerts Plus, by going to actionalertsplus.com. We'll see you guys here tomorrow.